A very good morning to everyone. My name is Kurt Reichenberg. I work at the European Court of Justice in Luxembourg, and I'm chairing this panel this morning. But first of all, I would like to thank the university for inviting me, and I think all my partners here would join me in thanking especially Professor Marta Villar for this invitation and for organizing such an interesting and challenging academic program. Let me briefly introduce my partners here on this panel. To my left is Cristina Garcia Herrera, who will speak last about, so we've inversed the order of presentations, about minimum pricing. This will be your part, your last one. Further to my left is Professor Lorenzo Del Frederico, who will speak first. He's professor at the University of Chieti Pescara. And to my right are Caterina Verigini and Concetta Ricci, both professors of tax law at the same university. So in order of presentations, Concetta will be second, you will be third, and you will be fourth and last. So that's the setup for this panel. And I will give the floor this time, not ladies first, but gentlemen first.
My topic is focus on the balancing test applied to energy taxes. As general outline, the main points could be some preliminary consideration on the notion of energy taxes and eco-friendly energy, the general framework. The balancing test is the central part of the presentation. The condition of state resources, this important feature in the system of Article 170 FU, the advantage on the recipient and the selectivity features, and the final remarks, the possible conclusion, possible guideline. So, first of all, a fundamental premise. In order to focus the balancing test on energy taxes, we have to consider the notion of energy taxes for state aid purposes. This is a topic already considered yesterday in several presentations, from different point of view, from Federica Pitrone, Marta, and other reporters. Whatever the sense may be, broader or narrower, for state aid purposes, the problem is the formal qualification is important or not. Of course, it's not important. We could remember in the case law, the Essent Northern case. In this judgment, an additional price or surcharge was assimilated to a parafiscal levy. So at the end, the amount, the sum could be classified as funds having their origin in a state resource belonging to the state revenue. Anyway, this profile, in the perspective of state aid, is absolutely irrelevant. Also, could be interesting some consideration regarding the Air Transport Association of America, the 2011 judgment of the ECJ regarding the ETS nature, fiscal, parafiscal, or real sort of tax. But anyway, this profile could be considered also by other colleagues in the following presentation. So, just to focusing my idea on the balancing test. The nature of the measure, fiscal, parafiscal, or tax measure, is absolutely irrelevant, because the balancing test is focused on the effects of the measure. Also considering the parafiscal nature of the ETS, at the end of the day, the general framework, by the point of view of state aid, is always the same. By the way, the ETS scheme is always ipso iure compatible with Article 107, limits or prohibition, because it is an expression of the European environmental policies. And this idea is based on the paragraph 3, letter E of the Article 107. In few words, the prohibition of state aids regards this member state and not the European policies, not the EU Commission initiatives. Returning back to the balancing test, against the backdrop regarding the ETS, the settled case law shows that each of the state aid condition takes on its nuance when applied to energy taxes, because we have a very complicated balancing test with several different interests. In particular, under the balancing test, the positive impact of the measure must be balanced with its potentially negative effects. Once again, there is the EU dilemma of the prevalence between environmental protection and the economic dimension. The first important feature is the state resources. So, by this point of view, it's important to consider the Person-Electra case. All the cases are precisely quoted in the in my paper. So we could now focus the attention regarding the main topic, not the details. So, in this German case, the ECJ saved the German legislation, which provided private electricity supply undertakings to purchase electricity produced in their area or supply for renewable energy sources at minimum prices higher than the real economic value, the normal value of that type of electricity. The financial burden arising from that obligation was allocated among those electricity supply undertakings. And this is a very important profile. Although the court admitted that such a regime confers a certain economic advantage on the producers of that type of electricity, since it guaranteed them, with no risk, higher profits than they would make in its absence, the European judge definitely stated that it does not involve any direct or indirect transfer of state resources to undertakings which produce that type of electricity. The principle was also strengthened in resisting the Commission objection, according to which the effectiveness principles required the concept of state aid to be interpreted in such a way as to include support measures which are decided by the state, but also when financed by private undertakings. Another significant case law is the collar. The court was called upon a mechanism for offsetting in full the additional cost imposed on undertakings because of an obligation to purchase wind-generated electricity at the price higher than the market price, which is financed by final consumers. As in the present case, there was a public support for renewables. Such a support passed through an obligation imposed on private undertakings to buy green energy at a certain price fixed by the state legislation. But there was a difference, and the difference is that in the court assumed that the sums collected from final consumers of electricity remained under public control, as they were allocated in the Caisse de dépôt et consignation, a public body existing in similar structure also in other member states, a public body under a mandate from the French state. We can find the same approach also in the Essent Network North case. So, as a general framework, in general words, funds financed by compulsory charge imposed by the legislation of a member state ex se do not represent state resources, unless state resources by the state aid point of view, unless they are managed and controlled directly by the state or even indirectly through a public or private body appointed by the state to administer the aid. There are also the DOCs and the cooperative agricole case. So, any compulsory obligation or charge is relevant as long as it is managed and controlled directly by the state or even indirectly through a public or private body appointed by the state. This is an important profile just because in other cases the European Commission above all follows a different approach. I would like to remember as the UK flood insurance, the flood scheme, the flood real estate scheme in 2015. Also in this case, in my opinion, there is a sort of state control regarding a private fund. So it's quite strange that in the flawed real estate scheme, the Commission at the end approved the scheme. And just going a bit outside our path today, a sort of similar schemes is possible found also in the schemes regarding the banking crisis. But of course, this is a totally different topic. So, in general, the question of presence, because now the feature is the advantage conferred on the recipient and the selectivity profile. In general, the question of the presence of an economic benefit and the question of selectivity are so closely linked that cannot be treated separately. However, about eco-friendly policies, an interesting point to address is the qualification as advantages falling within the scope of the treaty rule. Of the emission regarding the emission right in case they are grandfathered. According to a broad notion of energy taxes, free allocation could be defined as a sui generis tax relief, or anyway a parafiscal advantage. Anyway, it is not a problem by the state aid point of view, because again, I have to clarify my common opinion, not my opinion, a common opinion on this point. The ETS scheme and also all the different environmental schemes are expression of European policies, so they are outside the prohibition of state aid, because they are state aid, not limitation regarding the European policies. An interesting case is the NOx case in the Dutch legislation. Is a sort of dynamic cap system. In few words, the undertaking could comply with the emission standard thus laid down by taking steps to reduce NOx emissions in its own facilities, by buying emission allowances from other undertakings, or by a combination of those options. Emission reduction in the form of NOx credits were offered in the emission market by facilities whose emission fall below the emission standard. And there is a difference between the cap and trade system and this dynamic cap. Anyway, according to the Commission opinion, the mechanism constitutes a state aid as long as it is characterized by grants by the state in the form of the NOx credits, free of charge to a specific group of undertakings. And in this case, we have to consider that it is precisely a state measure, not a European measure as in the case of ETS. Both the General Court and the European Court of Justice observed that the advantage consisted in the tradability of these allowances as it could entail an additional burden for the public authorities in form of an exemption from the obligation to pay fines or other penalties. In other words, such a measure must be regarded as an economic advantage which the recipient undertaking could not have obtained under normal market conditions. So, regarding the selectivity for eco-friendly measure, in all the decisions, the ECJ has been particularly careful to design the selectivity condition, balancing the need to promote eco-friendly policies with the constant attention to avoid risk disruption in the internal market. Could be interesting the Adria wine pipeline, but maybe Caterina Verrini could consider this decision. So I skip this case. Is that good? It's significant the British aggregate case with a contraposition between the European General Court and the DCJ. The measure consisted in the exemption of certain virgin materials used as aggregates from an environmental tax which was in principle a burden on the commercial exploitation of virgin aggregates. For the European General Court, this exemption does not represent a derogation, an advantage in any way from the system of the environmental tax under consideration. According to the General Court, the decision to impose an environmental levy only in the aggregate sector and not generally in all the sectors having the same impact on the environment falls within the power, the discretionary power of the member state to set its priorities in the economic policies and in fiscal and environmental fields. The ECJ reached a different conclusion. The General Court had confused the environmental objective with the effects of the fiscal measure in question. Even though the selectivity condition does not make any distinction according to the causes of or objectives of the state measures, but defines them on the basis of their effects. In other words, despite environmental protection considered as a legitimate need, a fair principle, but it is not sufficient to exclude the selective nature of the measure. I think that, Mr. Chairman, I have to conclude, or I have another couple of minutes?
2 more minutes.
2 more minutes. Okay, thanks. So, just focusing my last minute on the balancing test and the environmental impact. In the British aggregates and also in other case law, the ECJ emphasizes the environmental impact of the measure under examination, but this is the balancing test before the European Commission or before the European judges is a real example of deep discretionary power, a real balancing between different interests. So it is very difficult to understand what could be the legal framework, just because the framework is not merely legal but a bit political. So, final remarks. For eco-friendly taxes, the balancing test should imply an assessment of selectivity criterion based on the equivalence of the environmental effects compliant to the polluter pay principle. When state resources are graduated on the basis of the undertaking's environmental impact, cannot be considered selective. State resource given to eco-friendly behaviors should be justified passing the selectivity test, generally but not always. At the same time, charges on polluting undertakings would not fulfill an indirect selectivity measure, as such requirements should be filtered in compliance with the polluter pay principle. Thank you very much.
This was an excellent overview of the relevant case law, and especially you highlighted very well the difficulty or the test used by the court, to what extent, when the threshold of public control and public involvement, like the Vent de Colère case, then brings it under the notion of state aid. In Preußen-Elektra, this was not the case, because the state, as the court said, well, it was legislation, but the state was too far away from administering the system, while in Vent de Colère, the court established various criteria to show that state involvement was very strong, state control, state administering of the scheme, so it was brought under the notion of state aid. You also cited the General Court judgment, Commission versus Austria. You are certainly aware of the even more recent judgment, Commission, Germany against Commission, May 10th, 2016, which confirms exactly what you said. It was the other judgment here, just in case someone is interested in it. But in Germany against Commission, the case law you cited were fully confirmed, so the German action was dismissed by the General Court, and we will see whether Germany will go into appeal. Okay, excellent. Next speaker is Professor Concetta Ricci.
The topic of my report is about the relationship between tax relief energy taxes and free emission allowances. In particular, I'm going to talk about this relationship through the analysis of the Court of Justice case law. Some notes about the ETS system. The ETS system was first introduced in 2005 and has undergone several changes since then. The system was implemented in three trading periods, known as phases. The first phase goes from 2005 until 2007, followed by the second phase, running from 2008 until 2012, which coincided with the first commitment of the Kyoto Protocol. And then the current phase began in 2013 and will last until 2020. The ETS system works is based on the cap and trade principle, which it means that the overall volume of greenhouse gases that can be emitted each year in the states covered by the system is subject to a cap set at EU level. Within this Europe-wide cap, companies receive or buy emission allowances which they can trade. How the ETS system works? The ETS system legislation creates allowances, which are essentially rights to emit GHG emission equivalent to the global warming potential of 1 ton of CO2 equivalent. The level of the cap determines the number of allowances available in the whole system. The cap is designed to decrease annually from 2013, reducing the number of allowances available to business covered by the EU ETS by 174% per year. This allows companies to slowly adjust in order to meet the target of emission reductions. Each year, a proportion of the allowances are given to certain participants for free. For example, in those sectors where there is considered to be a potential risk if they pay the full cost of pollution emission, that pollution production could be shifted to those countries with a less ambitious reduction actions. The rest are sold mostly through auctions. At the end of the year, the participant must return an allowance for every ton of CO2 they emit during that year. If a participant has insufficient allowances, then it must either take measures to reduce its emission or buy more allowance from auctions on the market or from other participants who have reduced their emissions and hold surplus allowances. In the first two periods, most allowances were given out for free to each participant by each member state in accordance with the rules set out in the benchmarking decision, which provides that in the first 3-year period, which began in 2005, member states shall allocate at least 95% of the allowances free of charge. In the second 5-year periods, member states shall allocate at least 90% of the allowance free of charge. In the third period, which is the current phase, actioning is begun the default method of allocation. So now action is the basic rule of emission allowances allocation. The first action took place in 2012. How do the actions operate? Bidders in the action bid for a number of lots. Each bidder have to specify the number of emission allowance that he would like to buy at a given price. The minimum bid size is 1 lot, and each lot represents 500 allowances. Bidders are able to bid directly or by submitting the price and the number of lots. At the close of the bidding window, the action platform determines and publishes the clearing price. What is the clearing price? In brief, the clearing price is the price at which the demand of emission allowances equals the number of allowances offered for sale in the action concerned. So successful bidders are the ones that have placed the bid for allowance at or above the clearing price. All bids above the action clearing price will be matched. Tied bids at the matched price, the action clearing price, are selected randomly. For each action is also set out this is only a schema or image of what I've just said. For each action is set out a reserved price. The reserved price is the price below which no allowance can be allocated. So the result is that no allowance can be sold at a price below of the reserved price. So the subsequence is that if the clearing price is significantly lower than the reserved price, the action will be cancelled. The main problems which arise from the study of the ETS system and its legislation are the follows. First of all, the ETS tax nature, and this topic is also considered by the Professor Del Federico. Then, the compatibility of a gift tax on free allowances. On the first hand, we have to investigate the legal nature of the ETS system. In this regard, emission allowances are considered as a right and not as an obligation, in accordance with the conclusion of the High Court of England and Wales in the case between Armstrong and Winnington. Emission allowance should be considered intangible property because it confers an entitlement on the holder to exemption from a fine, an exemption which is transferable, and an exemption which has value. allowances have value because there is a limited or capped supply, and there is demand for them from those participants for whom the cost of making reduction is higher than for other participants. About the ETS tax nature, the EU ETS qualifies as a non-fiscal measure and as such cannot be considered as constituting fees, dues or other charges prohibited inter alia by Article 15 of the Chicago Convention. In according to this conclusion, emission allowances have no fiscal nature because tax surcharges are generally determined by the state authority and not by the market. They do not provide title while the allocation of emission allowance does. Let we read the conclusion of the Advocate General Coco in the case 366. The Advocate General explained that charges levied as consideration for a public service used. The amount is set unilaterally by a public body and can be determined in advance. Other charges too, especially taxes, are fixed unilaterally by a public body and laid down according to certain predetermined criteria such as the tax rate and the basis of assessment. The Court of Justice implicitly confirmed this conclusion when holding that the requirement imposed to the aircraft operators can't be considered as a tax or charge on fuel loads because, unlike a duty, tax, fee, or charge on fuel consumption, the scheme introduced by the directive, apart from the fact that it is not intended to generate revenue for the public authorities, does not in any way enable the establishment, applying a basis of assessment and a rate defined in advance. So, according to the Court of Justice, in light of all those considerations, it cannot be asserted that directive involves a form of obligatory levy in favor of the public authorities that might be regarded as constituting a customs duty, tax, fee or charge on fuel held or consumed by aircraft operators. In conclusion, the Court of Justice and the Advocate General, the central point made both by the Court of Justice and the Advocate General is that the EU scheme have no fiscal nature because the price paid for the emission allowances can't be determined by the state authority in advance, but it depends on free market forces. The conclusion of the Court of Justice aren't fully persuasive, especially from the point of view of the public expenditure. In fact, first of all, for actioning allowances both from public authorities, the fundamental condition of functionalization of the revenue to the public expenditure does exist. The directive, in fact, recommends to allocate at least the 50% of such revenues to the environmental aims listed in Article 10 of the directive. So, we can say that emission allowances are compulsory payments and the revenue accrues directly to the government budget and may be destined for particular purposes. Other reasons. For other reasons, we can arrive to the same conclusions. In particular, but the lack of a basis of assessment and the right defined in advance, they are not essential requirements of the notion of tax. So we can conclude that the ETS is an hybrid and multi-purpose mechanism with a lato sensu tax function. The second question concerns the compatibility of a tax on free emission allowances. We can investigate this question through the analysis of a recent Court of Justice case law, SCO-Energo versus Czechoslovakian state. The facts are these. In 2011-2012, the Czechoslovakian state imposed a gift tax at the rate of 32% on free emission allowances allocation on electricity producers which purchase these free emission allowances. The revenue of the tax was intended to support the operators of photovoltaic power station. So SCO-Energo, which was a Czechoslovakian electricity producer, is disputing about the compatibility of this gift tax with the Article 10 of the directive, which provides that for the 3-year period beginning 1 January 2005, member states shall allocate at least 95% of allowance free of charge. The preliminary ruling is this: must Article 10 be interpreted as preventing the application of provision national law which make the allocation free of charge of emission allowance in the relevant period subject to gift tax? In this regard, the court stated that neither Article 10 of the Directive or any other provision of the Directive concern the use of those emission allowances or expressly restricts the right of a member state to adopt measures which may affect the economic implication of using such allowances. Consequently, member states are free, as a rule, to adopt economic policy measures such as price controls on the market for certain essential goods or resources, determining the manner in which the value of the emission allowance allocated free of charge to producers is to be passed on to consumers. Nevertheless, the adoption of such measures must not neutralize the principle that emission allowances are allocated free of charge. In brief, the allocation free of charge in the Article 10 of the Directive precludes not only the direct fixing of a price on free emission allowances, but also the subsequently levying of a tax in respect of this allocation. So the Court of Justice in this case stated that this measure, so this gift tax, is incompatible with the requirement laid down by the Directive that allowances should be allocated free of charge. The conclusion is that Article 10 of the European of the Directive must be interpreted as precluding the imposition of a gift tax such as that at issue in the main proceeding if it does not respect the 10% ceiling on the allocation of emission allowances for consideration laid down in that article, which is a matter for the referring court to determine. I'm going to the conclusion. This is my final remarks. First of all, about the tax nature, the ETS tax nature. The ETS is an hybrid and multi-purpose mechanism with a lato sensu tax function for the reasons that I have just said. And about the compatibility of a gift tax or a tax on free emission allowances, we can say that the allocation free of charge under Article 10 of the Directive precludes not only the direct fixing of a price for the allocation of emission allowances, but also the subsequent levying of a charge in respect of their allocation. Thank you very much.
This was an excellent complement to the first review of the court's case law. And now I give the floor to Caterina.
Good morning. First of all, I want to thank Marta and Pasquale for the invitation in this important seminar. And congratulations for the organization. So, tax incentives in the energy sector reflecting on the determination of prices could create distortions in the European market. Therefore, it's essential to analyze the compatibility of these measures with the limits and prohibitions generally imposed by the treaty's tax provision. Tax benefits introduced by member states often could be declared state aid not compatible with the European legal system because they could be considered disrespectful of the selectivity criterion, the principle of equal treatment between companies, and the competition principle. The analysis of the Court of Justice case law shows the aim at avoiding the adoption of measures favoring certain companies or the production of certain goods rather than others. On the basis of those criteria, the Court of Justice declared a series of energy tax advantages incompatible with the state aid rules. In the judgment auto compu, the court considered that the first paragraph of Article 95 of the Easy Treaty must be interpreted as to preclude an excise duty which forms part of a national system of taxation of sources of energy from buying levied on electricity of domestic origin at rates which vary according to its method of production, while being levied on imported electricity, whatever its method of production, at a flat rate which, although lower than the highest rate applicable to electricity of domestic origin, leads, if only in certain cases, to higher taxation being imposed on imported electricity. In another case, Adria Pipeline, the court had to assess whether there was a state aid in case of a partial rebate of energy taxes on natural gas and electricity as provided for in Austrian legislation only for companies producing material goods with the ultimate goal of preserving their competitiveness. The court considered that the benefits for companies producing goods from those providing services was not justified by the nature or the general scheme of the reference tax system. Particularly, it was found the existence of a state aid for three reasons. Firstly, also undertakings which provide service such as those producing material goods could be great consumers of energy. Secondly, it was neither a temporary regime nor therefore finalized to allow enterprises producing goods to gradually adapt to the new regime, but it was simply permanent. Finally, the environmental objectives could not be used to justify the different treatment between companies because energy consumption was damaging for the environment regardless of the sector of activity. In the case DI, the court has held to be incompatible with the Articles 102 and 106 of TFEU, the measure by which Greece granted to a company in the electricity sector rights on the lignite deposits in which there were more than half of such materials reserves, and instead refused other operator requests for similar permits. Since lignite is the cheapest fuel used in the power plants, the privileged access to this raw material in the upstream market extraction strengthened the company's position on the downstream market for the production of energy, creating an equal treatment and enduring market entry by potential competitors. In the case Austria Commission and the General Court said that the partial exemption of energy excise duty related to the obligation to buy green electricity, which Austria tried to grant to energy power high-consuming companies, was a forbidden state aid. In the case, the partial exemption was selective because it introduced differentiation between companies which were in a legal and factual situation that is comparable in the light of the objective pursued by the measure in questions. Marta has commented this case on Rivista Quincena Fiscal. Unlike the above mentioned cases, there have also been judgments in which the potential incompatibility of the tax relief has been justified on the basis of the most important purposes of environmental protection. For example, in the case Prussian Electra. The court considered compatible with the EU law the German tax legislation, which imposed private suppliers to purchase electricity produced from renewable sources in their own geographical area at minimum prices higher than the market value. In this case, the ban on state aid discipline was considered less important than the need to promote the use of renewable energy sources, which are able to reduce the greenhouse gas emissions, one of the main causes of climate change which the European Commission and the member states want to fight. Always in another case, the court had to analyze whether the tax on the use of nuclear fuel for the production of commercial electricity introduced by Germany represented or not a state aid. This tax was introduced for a limited period of time in order to generate new revenue necessary to reduce costs for the federal budget arising from the needed rehabilitation of the mining site of Axis 2, where radioactive waste arising from the use of nuclear fuel were stored. According to the court, the tax was not a selective measure as the electricity production not using nuclear fuel in relation with the objective pursued by that regime was not in a legal and factual situation comparable to the electricity production using nuclear fuel, provided that only the latter generated radioactive waste. This tax could not be considered as a tax having an equivalent effect to a customs duty, as it was applied not because the nuclear fuel crossed the border, but because it was used for the commercial production of electricity without distinction with regard to the fuel's origin. In addition, the revenue was intended to finance the cleanup costs for the damage caused by the specific activities subject to taxation. The Court of Justice also ruled on a specific Italian case, declaring that the tax measure is incompatible with the ban of state aid it's issued by virtue of an assumed environmental objective. The case concerning the tax on the tube of the Sicily region. The tax was a fixed levy on the specific activities of transportation and marketing of gas. This law should have recovered resources to finance investments in order to reduce and prevent potential environmental damage caused by pipelines installed in the Sicilian region. According to the Court of Justice, it was considered unlawful because the supposed environmental purpose, external or internal to the structure of a tax, cannot itself justify the introduction of a tax having an equivalent effect to the one of customs duty, since the fundamental European principles, including the environmental one, cannot be affected by the regional policy needs. In relation to the tax benefits on the energy market, a case law that also raised the interest of the doctrine involved an Italian constitutional court's decision. The judgment refers to the issue of the constitutionality of an article of Friuli Venezia Giulia regional law concerning the reduction of fuel consumer prices, suspected both of reducing excise duty contrary to the community law and of introducing a public aid to undertakings. The mentioned law contributes to private citizens residing in the region for the purchase of fuel, these grants are paid directly by the operator of the service station, recognize a corresponding reduction in fuel price, a reimbursement from the chambers of commerce to the same manager of the contribution provided to consumers. In practice, the regional contribute represented a discount on the price of fuel supplied to the pump. According to the Italian Constitutional Court, the law does not represent a reduction in the excise duty, but a reduction of the fuel's pump price without affecting the tax components of the said price. It's a contribute provided downstream of the taxation mechanism and unrelated to it because the taxpayer is the owner of the tax warehouse from which the fuel is extracted for consumption. In this case, there is another problem because the Constitutional Court has considered the excise duty as a tax on the production, while the framework as a tax on consumption would be more appropriate. In a European perspective, okay. However, the measures presents two critical issues. First, it can be seen only as a waiver of a portion of revenue from excise duty. Secondly, the reduction in fuel price results is indirect benefits for the economic operators and for the entire production distribution chain. Indeed, a decrease of consumer prices is likely to result in fuel consumption's increase connected with the simultaneous reduction of private supply from distributors located across borders. The measures, in fact, reducing the purchase price of the good orients the public choices, leading in favor of the concerned enterprises a commercial advantage that they could have not achieved in normal market conditions. In conclusions, subsidy actions in the energy sector are strategic for the European market because they may encourage sustainable development, but they can also influence enterprises' competitiveness, producing a source of distortion of competition. The issue is closely linked to European state aid rules provide for in Articles 107 and following of the TFU regarding the exercise of free and undistorted competition. The approach emerging from the Court of Justice case law is mainly based on an economic point of view. This means that fiscal measures compatible with the principle and values of the constitutions and the legal traditions of the single member states could be classified as a state aid because of the only economic data without taking account of the specific characteristics. Tax advantages in the energy sector, like all other kind of environmental subsidies, must respect the European tax principles of proportionality and non-discrimination. In general, all the tax relief that give beneficiaries a selective advantage compared to the companies of the same or other sector could be declared conflicting. Therefore, after having established the selective nature of the measure, it's necessary to assess whether it can be justified by the nature or by the general scheme of the reference tax systems. Thank you.
I think it was very useful that you mentioned also the national dimension, whatever the scheme is. As we've seen in Germany, the nuclear the nuclear fuel tax has given rise to litigation in Germany. So it's not only EU law, but it's also national administrative or constitutional law that that comes into play, whatever the scheme is. Thank you again, and the floor is for Christina for a minimum level of taxation. Just a little word, since we started 15 minutes later, we will finish 15 minutes later, so we will go to our coffee break a little later, so don't abridge your presentation, do what you have to do, and thank you.
I would like to thank Professor Marta Villar for the invitation and also for the extraordinary work she's been doing during these 2 years, for the support and for the coordination. Thank you very much, Marta. Okay, my topic is the European Union Court of Justice case law and the minimum level of taxation on the Energy Directive. And what I'm going to do is I'm going to start with a very brief introduction. Then I will continue with the objective scope of the Energy Directive, which is very important in this field. And then I continue with the case law. And I'm going to finish with some conclusions and final remarks. The introduction. I think that there are 2 things, 2 statements already known. The first one is that the Energy Directive is the result of a long process of negotiation, which has resulted in harmonizing laws of energy products and electricity. And the other statement is that the Energy Directive has been limited to integrate existing legal regimes of the different member states. Then the result of both statements is that in any case, one can speak about establishing a real energy tax harmonized within the European Union as an instrument of policy environmental protection. The basic content of the directive can be summarized in 3 major issues. First, the target area is increased and happens to include, in addition to oil, natural gas, coal, and electricity. Secondly, on the one hand, new imposition, minimum taxation of energy products already settled down by harmonized taxation were subject to minimum levels of taxation by the former directive, and on the other hand, the requirement of new levels of taxation of energy products is introduced, which to the date had not been tax harmonized. And third, and finally, and I think it is the most important, a wide range of assumptions, differentiations, and different tax exceptions is established, which reduced and even eliminate, in some cases, the effective taxation of certain products. The objective scope of the Energy Directive and the minimum level of taxation, I would like to say a few things. The first issue to consider is that the Energy Directive only explicitly sets a minimum level of taxation for certain products, the ones that we can see on the slide: petrol, diesel, kerosene, fuel, oil, LPG, natural gas, coal, coke, and electricity. But however, the Energy Directive incorporates other energy products not listed explicitly in the minimum levels of taxation because their normal use is not for fuel. But if they were used as fuel, these products are taxed depending on their use with the same tax rate for heating oil or fuel equivalent locomotion. Thirdly, the directive establishes a tax differentiation depending on whether the product is used or not for industrial or commercial purposes. And fourthly, the directive regulates expressly few cases of non-liability. The common characteristic lies in the absence of liability based on the use of these products. Then, following products are not subject. First, energy products used for purposes that are neither automotive fuel or fuel for heating. In this sense, when these products are used as a raw material or in an application that does not involve combustion, they are not subject to the directive. Second, dual use of energy products. We will talk about this later. Third, electricity, when it represents more than 50% of the cost of the final product. And finally, energy products used in mineralogical processes. And the mandatory, as we know too, the directive regulates several mandatory and optional exceptions. The mandatory exceptions are related to the following assumption. First, when energy products and electricity are used on the one hand to produce electricity, or secondly, to maintain the ability to produce electricity. However, it allows to the member states in these assumptions by establishing taxes by environmental policy. In this case, compliance with the minimum level of taxation of the directive is not required. Second, in the case of energy products supplied as fuel for the purpose of air navigation, which is different to private pleasure craft. And third, energy products supplied as fuel for navigation, except those used in private pleasure craft and electricity produced on board boats. Then we can really see the importance of the implementation of the minimum levels of taxation, the definition of the use criteria, and the determination of legally undefined concepts which are regulated in the directive, and where, in this field, the case law is really important. Okay, the case law of the Court of Justice. First, the CJ case law makes clear that member states are empowered to approve taxes on energy products covered by Article 2, Paragraph 1 of the directive when they are used for purposes other than as motor fuel or the fuel heating. However, any product used as an additive is considered subject to the rules of imposition of the directive and therefore the minimum tax level. Second idea is that the ECJ has analyzed Article 4, Paragraph 2 of the directive, according to which level of taxation must be understood as the total charge levied in respect of all indirect taxes except value-added tax, calculated directly or indirectly on the quantity of energy products and electricity at the time of release for consumption. The court considers that a tax, in order to fulfill the requirements of Article 4.2 of the directive, has to establish, it is necessary to establish a link between the chargeable event and the amount of energy actually produced. Then, in case of absence of such link, the tax would be excluded of the scope of the directive, and therefore the member state would be entitled to tax freely those events. As a consequence, the Court of Justice considers to be excluded from the scope of the directive a tax levied on the thermal power of nuclear reactors, understood as the capacity of such reactors to produce heat, and fixing the tax rate in accordance with the authorized theoretical maximum thermal power of nuclear reactors, instead of taking into account the real amount of energy produced. The third idea is that the Court of Justice has also studied several times the use criterion in order to establish the tax rate applicable on energy products to which the directive has not specified any concrete level of taxation. And to this purpose, and according to the Court of Justice, it is necessary to distinguish two different moments. In first place, it is necessary to determine the intention to use the product as heating fuel or as a motor fuel. Secondly, it must be determined the concrete kind of heating fuel or motor fuel within the categories listed in Annex 1 of the directive. The one is this fuel is acting as a substitute, or in the absence of it, the one that, according to its nature and possible uses, seems closest to the fuel analyzed. And last, regarding to non-taxable and exceptions regimes, the Court of Justice has established the following. 3 ideas. First, the court settles the interpretation about what must be understood as the dual use of energy products. In first place, the court affirms that member states are entitled to enact in their domestic laws a definition of dual use even more restrictive than the one that is in the directive. And secondly, the court defines the dual use concept. An energy product has a dual use when it's used both as heating fuel and for purposes other than as motor fuel or heating fuel. That implies the exclusion of an energy product to the scope of the directive only if such product is not intended to be used to motor fuel or heating fuel. There may be dual use of an energy product burned in a manufacturing process where the process cannot be completed without a substance that can be generated only by the combustion of the energy product. Okay, the second idea in this field is that nuclear energy is excluded of the scope of the directive. This implies that nuclear fuel it is not covered by the exemption of Article 14 of that directive, and therefore open doors to the member states in order to tax the use of nuclear fuel to produce commercial electricity. And last, compulsory or mandatory exemption laid down in favor of motor fuel use on air navigation has been also studied by the Court of Justice. In concrete, the court has established that first step in these cases must be the delimitation between commercial and private navigation. To do so, it must be analyzed whether the plane is directly used to perform on-air air services. For this purpose, the term navigation requires that the provision of service for consideration be inherent of the vessel's movement. And secondly, the directive does not seek to establish general exceptions, and as a consequence, such exceptions must be considered from a restrictive perspective. Then I go to the final remarks. The Court of Justice case law dealing with the directive, with the energy directive, is focused on the delimitation of the scope. On the one hand, it makes an interpretation of the use criterion, along with some exception and non-taxation situation, as, for example, the concept of dual use or private pleasure air navigation. On the other hand, taking into account different domestic taxes, the court has studied various scenarios where concrete energy products must be included or excluded from the scope of the directive. The case law analysis clarifies two main issues. First, it states some scenarios where member states must apply the regime laid down in the directive in order to set up several taxes. In these cases, member states are compelled to apply minimum taxation levels therein. Secondly, it establishes various situations where taxation would fall out from the scope of the directive, either because of the nature of those products themselves or because the use given to them. This circumstance entitles member states to levy taxes over such products out from the scope of the directive without need of compliance with the directive legal regime and the minimum taxation levels. Thank you very much.
Another interesting complement to our review of the court's case law. I think it was fantastic, very, very comprehensive what the panel here presented to you. Since we are running behind schedule, I'm reluctant to take questions, but if there is a question, maximum 1 or 2 questions. If not, I could release you to the coffee break. Okay, no wonder that there are no questions, because this was so good and so comprehensive. Thank you very much again.